I'm CA Dr. Mitil Chokshi, Senior Partner, Chokshi and Chokshi Chartered Accountants.
Hi, I'm CA CFA Parsh Chokshi, partner Chokshi and Chokshi Chartered Accountants.
We are discussing today the New India Co-operative Bank issues, the caution around it by the Reserve Bank of India, the worry that the depositors have with regard to redemption of their deposits, the overall scenario that one is going to face in regard to the bank over the next 6 months.
We will also discuss key statistics around this entire issue, and we will also compare it with other urban cooperative banks so that we have the real picture.
India has about 1400 odd UCBs, urban cooperative banks. New India Cooperative Bank is one of them. Earlier, there were about 1900 of them, and pursuant to the PMC bank scam and everything, there have been some mergers, etc., and therefore it has resulted in the number being about 1400. Now, let us go to the history of New India Bank. What is there in New India Bank? We are looking at, typically there are certain statistics around it, which I will have Parsh to explain. But in terms of the history, New India has a borderline of capital adequacy. It has a little higher NPA levels, certain higher NPA levels. And in addition to that, what happened is that there was some fraud that surfaced of about 122 crores. They were having a loss of certain number, about 20 odd crores, 22 crores, though it was receding from the previous or reducing from the preceding year. But this fraud has come out as an outlier or an abnormal event. Now, this abnormal event has put the entire financial numbers of the bank, including the solvency, at risk. Because it is at risk, we believe that therefore, as a very, very precautionary measure, RBI has taken this caution list position on the bank because they want to protect all the liabilities, which is the depositors' money that has to be refunded back by the bank. Mind you, no banking license has been revoked, right? What has happened is that it's only on the caution list for the purpose of making sure that there is an administrator. Now you have an administrator who is an ex-chief general manager of a state bank, and they will also, you have a good chartered accountant advisor also. So all of these will kind of take the bank in the next 6 months to a logical conclusion in terms of determining the recovery of the assets, using those recoveries to repay the liabilities.
So, to just give you all a brief, the RBI order stated governance issues and liquidity issues within the bank. So, while we also have heard of a fraud that has surfaced, there are minor details within this entire circular that say there is so much more. The gross NPA ratio of the bank, while it has been maintaining the gross NPA ratio according to its counterparts, the net NPA ratio is at 5.43%, which is unheard of as compared to the industry, which is working at below 2%. Moving forward, the capital adequacy ratio, the most important ratio for financial health, is currently running at 9.6%, which is lower than the RBI minimum capital adequacy ratio, which is 10%. So there is a lot of governance as well as financial health issues, which is why RBI has decided to supersede the board moving forward.
It pains me for the depositors because they are going to be obviously stressed out about whether they will get the money back or not. But when it comes to the RBI steps, see, it's a very typical situation where you are on a T to go left or to right. Now you do not know what time you have to go left and what time you have to go right, right? In my view, whatever step has happened adequately at this point in time. One cannot preempt this kind of a step and have an advance situation, especially when financial numbers were not so devastatingly less. Now look at the specifics. Out of 2400 odd crores of deposits, you have about 67% which are in term deposits. 27-30% odd are in savings, current accounts, etc. The term deposits are typically 1 to 3 years. So therefore, and the recovery advances are 1 to 3 years. So if the small depositor doesn't withdraw his term deposit, he doesn't become overly anxious and doesn't ask for a withdrawal. Obviously, there is a 6 months freeze. He has placed the term deposit for a little short term to a medium term to a long term period. Therefore, his hope is that the deposits are not going to be redeemed in the next 6 months or 8 months or 9 months, generally speaking, right? Now, the worry is the savings bank and the current account, where in the next 6 months you have the rickshawalas, you have the taxi drivers, you have others who have those small deposits and monies which are lying there, and if they are unable to withdraw for 6 months, that is the worry. The biggest worry is that level of depositors, which in terms of term deposits, yes, once 6 months goes through or 4 months or 5 months or within 6 months, whatever restructuring happens, we do not believe the current ecosystem of the present government will allow any small depositors to be affected. One is because they will make sure that there is proper vigilance, identification, recovery of the assets to repay the small depositors. At the same time, going forward, what will happen is that even the DICGC cover will kick in up to 5 lakhs to protect the small depositors.
To add here, so basically 27% of the entire book is small savings accounts. The entire worry for me from a chartered accountant perspective is that why were these particular people allowed to deposit funds even till Thursday? This should have happened, the freeze should have come in a little earlier, in my opinion. And what has happened now is a lot of people actually believe that cooperative banks, for the additional 1.5% return that they give, are a better option than the bigger banks, which has caused a major worry for them, even back in 2019 and now in 2025. So meeting day-to-day needs for these set of people will become a little bit difficult, and we would like to call this like an entire waiting game. What is going to happen? When is it going to happen? When is the cover going to kick in? Because the RBI has not called in for the bank to go into a moratorium period. They've just imposed restrictions. However, moving forward, we are hoping that the DICGC cover kicks in faster. Another specific point I would like to bring out is that last month, similarly, RBI had taken over the board of Aviom Finance Housing Limited, and since then, within a week, they called for its liquidation. So, are we expecting a liquidation coming in soon? I mean, only time will tell.
So even in the past, the history of wherever, be it the NSCL fraud or be it several other similar situations which have taken place, depositors in the range of 5, 10, 15, 20 lakhs have always not have had to face any significant haircut. The problem is anything which is about 25 lakhs is considered large. The moment it is about 25 lakhs, it's considered large, and that's where the vulnerability to haircut will arise in the times to come. We do not foresee that the small investors will get impacted, except for the fact that there will be a patience game, waiting game, for the next 6 months, and one will have to be anxious.
So another point to bring out here is the RBI order is extremely clear on this one point. So basically, while RBI has imposed several restrictions, the one thing that they have clearly stated is that even now, the borrower, if there is a borrower of money that the bank has lent out, and if the same person has deposited money, the same will be allowed to set off. While this is a regular banking practice, the bigger players usually borrow and deposit within the same bank. So this set off will allow the bigger players to have a sidestep, whereas the smaller players will be immediately provided for via the DICGC cover. And hence, as per the statistics, 90% of the 1,30,000 customers of the bank are not going to face a major problem over the next 6 months.
The customers have to try to not get unnecessary increase in blood pressure. Yes, I know it's easier said than done. If my money was also there on the block, I would be very, very worried it will come back or not. So, but one will have to have a waiting game. We've had even mutual funds, if you recollect, few years ago, there were 6 debt schemes of Franklin Templeton, right? And which were on the verge of a haircut. And thereafter, God was kind, everything turned out well, the regulators moved in fast, like they moved in this time also. Uh, you know, everybody got without a haircut. So I'm sure with the efficiency, the ecosystem that is there in the present government, they will move down fast for recovery of the assets, use that for repaying the small depositors. Please wait, hang on there, don't queue around. There is no point in queuing around outside and trying to recover your money, because that is not going to happen. What will happen in due course, and the present ecosystem, the government, the regulations will take care of you. And we are very confident under the current leadership that we see under our great Prime Minister and the Finance Minister. We do not see any problem, for the small investors. We've always seen that they have been given top priority. Senior citizens, super senior citizens, and the small investors are always a top priority.
Even if you look at key industry trends, we've seen 156 mergers in the cooperative banking space since 2004, which is remarkable. And over the last 1 year, we have seen 6 big mergers happening within the same space. So all I have to say is to the middle class, just hang in there. The money will be provided for either via a merger or by way of a cover. But all we have to do is just wait and watch. Everything will come in place.
No, that is something which they should appeal to the, they should write to the new administrators that some interim relief may be provided up to 50,000 rupees, 75,000 rupees, based on certain ballpark recoveries. But within the next 2 weeks or 3 weeks, they will still have to go through the pain for 2 or 3 weeks. Some kind of a representation can be made by them by way of individual letters, and I'm sure administrators will look into it. Can a law prevent any kind of a fraud that happens? Could we prevent a Satyam? Could we prevent, Madoff in USA? Could we prevent some other frauds in any part of the other parts of the world? There are certain outliers which are man-made, are developed. Now, if that be the case, and your numbers are fine, you're on the borderline, okay, your NPAs are little high, your capital adequacy is on the borderline. Yes, these are challenges which are there, but that is a part of the business. Today, as we see, the banking space is undergoing a reduction in the NIMs in the last 3 or 4 months, right? Does that mean that the banks are vulnerable? Is the banking sector vulnerable? No. There will be some inherent fraud somewhere or the other. So what needs to be enhanced is more and more real-time data analytics, more and more use of technology, which will enhance the lack of mismatch between the asset and the liabilities on an ongoing basis. If that can be generated on an ongoing basis, one will always know that my cash flow, inflow and outflow is always matching.
Subscribe to Midday India. Get direct notifications on all our videos by clicking on the bell icon.